Digital currency has recently been hitting the news. In October, we saw China's central bank give away 10 million yuan, which is about $1.1 million worth of their digital cash in a lottery to 50,000 people as a way to trial out their central bank issued digital yuan. By the way, the central banks are like the Bank of England here in the UK, and the equivalent in the US is the Federal Reserve. And it's the central banks who pretty much control the economy. They set the interest rates, they choose how much money to print, they're the ones who give out money to the commercial banks like HSBC or Halifax, who then deal with us, the consumers. We as consumers never directly deal with the central banks. So China's central bank gave away 10 million yuan, and the US now has been pushed even more towards digital currency after they had the colossal task of physically printing and sending out millions and millions of physical checks as part of their stimulus plans. And many other central banks throughout the world are now also working on their central bank issued digital currency, and this could mean that central banks would directly issue currency to people, and it could cut out the commercial banks. And also, because it's digital currency, there wouldn't be any paper cash anymore. Now, naturally, people are very concerned. Will the central banks have too much power? Or will they force people to spend by setting negative interest rates? Will they control exactly how much you can spend and what you spend it on? With the new system, the government would be able to monitor, track and record every single transaction you make, and not just track, but also approve of what you can spend your own money on. And with the way things are moving so quickly, I can tell you it's not a matter of if anymore, it's a matter of when. So if all of this sounds concerning to you and you're wondering what you can do, then make sure to watch this video to the end so you know exactly what this new digital currency could mean for you. Hey, what's up people? Welcome back to our channel, Ralph Finance UK. So let's get straight into it. This year has really pushed everyone towards a world of digital currency. As I said before, China are already trialing out their new digital yuan. Winners of the lottery have to download an app, and through this app, the central bank can deposit money instantly into their accounts. So on one side, you have the US having to print physical stimulus checks and post them to millions of people, and on the other side, it's a digital instant transaction. And this is one of the reasons that the US is now pushing for a digital currency. The Federal Reserve, the central bank for the US, is already working to develop a central bank issued digital currency, and the Secretary of the Treasury has hired digital currency exchange Coinbase's Brian Brooks to help innovate and create this new digital currency. In April 2020, South Korea's central bank launched a 22-month pilot program, and over the course of 2020, we have seen central banks not just in China and the US and Korea, but also here in the UK and many other countries, including the European Central Bank, all working on a central bank digital currency. So we are moving towards a cashless society. Now, because these digital currencies are issued by the central banks, they're known as central bank digital currencies, or CBDCs. And as they're digital, you can send and receive this currency on your phone. Now, the main difference between CBDC and our current currency system, apart from the fact that it's fully digital and so there's no proper paper cash, apart from that, if we have CBDC, then money can be sent straight from the central bank to the individual. And the main concern is exactly this. CBDC is very centralized. The central banks essentially have complete control over it. They can create new coins, as many as they want, as often as they want, and they have the choice of who gets it and how much they get. And so essentially what this means is central banks have complete control over creating and allocating money in our society, and the government will be able to monitor, track and record every single transaction you make. But it's not just track, they can also approve of what you spend your own money on. Now, some of you might be thinking, aha, this is where Bitcoin shines as it's decentralized. Now, we'll be talking about Bitcoin later on, but for now, let us focus on the current system. In the current two-tier system, we have the central banks issuing money to the commercial banks like HSBC or Halifax, who then issue it to the people. So we have two tiers, the central bank, which in the UK is the Bank of England, and then the commercial banks. Now, if I wanted to send you some money, I would have to do a bank transfer, and my bank and your bank would both have to approve. So you might say, well, what's the difference if now the central bank has to approve rather than a commercial bank? You still have to get someone's approval. Well, there is a difference, and it is a big difference, and that is commercial banks don't really have the responsibility of stimulating and stabilizing the economy. The central banks do. They're the ones who can print money and they're the ones who decide the interest rates. So take this as an example. Let's say I hold a large amount of savings in my account and let's say I don't really spend that much money. Then I'm essentially not really contributing to the economy that much, as the economy does rely on people spending. Now, when my bank sees my large bank account and they see that I don't spend, they're not really going to say anything, or at least you would hope. Now, replace my bank with the central bank may say something, as they're the ones who are in charge of stimulating the economy. They can literally turn around and say, whoa, you have too much saving, you're not spending enough, you're not contributing to the economy, either spend that money or we'll implement a negative interest rate for you. Think of it as you're getting taxed for not contributing to the economy, and you can see how much of a problem this would be. Now, the commercial banks would probably never do this to you, or again, you'd hope so anyway, but it would be very easy for the central banks to do this. And so rather than seeing your savings deplete in this sort of tax, you would be forced to spend. And so perhaps one of the largest concerns people have is, will central banks have too much power? Now, people may be reluctant to accept all of this, but if I'm honest with you, people may not have a choice. In China, they did the lottery and gave away some of their digital yuan. And let's be real, no one's going to say no to free money. So what we could see is the central banks issue any new stimulus packages only in CBDC form. They may say, no, we're not issuing any stimulus in the normal currency, it's only going to be available in our new digital currency. And so people won't be left with a choice. We've already seen the situation in the US with food bank queues the longest they've ever been. And so if the central banks issue stimulus in this new digital form, people naturally won't be thinking about the long-term consequences of CBDC when they've got their families to feed, and rightfully so. Now, people have been buying gold, as gold has been used as a currency for thousands of years, and even to this day I can pay you in gold and you have confidence that you can use that gold to buy something else. And now people may also start buying Bitcoin, as Bitcoin is decentralized. There's no single entity that has control over it, and we've already seen Bitcoin prices through the roof in 2020. But the central banks could literally say no one's allowed to buy gold or Bitcoin. Now, you might be thinking this sounds absurd, but you have to remember, back in 1933, when there was a really high demand for physical gold, President Roosevelt signed an executive order, quote, forbidding the hoarding of gold coin, gold bullion, and gold certificates within the continental United States. So all citizens had to hand in their gold, and if they didn't, it was a $10,000 fine, and this is back in 1933, or a 10-year imprisonment, or both. So in today's time, if the central bank say no one can buy gold, then all the gold transactions will simply just get blocked, and the same goes for Bitcoin. I mean, China and Russia have already banned Bitcoin. Now, a very similar alternative to central bank digital currency is a two-tier model, where it's the same digital currency, but we still have the commercial banks. And like I said, the commercial banks don't really have the responsibility of running the economy. The central banks do. And so in this way, the central banks are essentially limited in their power. And this two-tier model is very similar to what we already have today, but the main difference would be there's no physical cash. So it would be more efficient. But every transaction would be recorded, as there wouldn't be any off-the-books paper transactions. So bringing the overall picture together, we currently have a fiat currency issued by the central banks in a two-tier system, the central banks and the commercial banks. The alternative is CBDC, where the commercial banks could be cut out and the central banks would have a lot of power and control. We could also see a CBDC but still keeping the commercial banks, so we would still have that two-tier system, which would essentially limit the power central banks have, yet it would still solve issues such as the US having to physically print stimulus checks, but it would mean every transaction is still recorded, as there's no off-the-books paper cash transactions. Now, all of these still don't solve the main issue that our currency faces today, and that isn't that the US has to physically print stimulus checks. But before I go on to the main problem, if you are finding value out of this video, then please do hit that thumbs up button. It really does help get our content in front of more people just like yourself. Now, the main problem is this. We can agree that for something to have value, there needs to be a limited supply of it. The supply side must remain scarce in order to hold value, and that's where we have the big problem, because neither the US dollar or this new CBDC is in limited supply. And the reason we have to consider the US dollar for a second rather than our British pound is because it is the world reserve currency. 70% of all currency reserves throughout the world are in the dollar. So every currency is tied to the US dollar, so whatever happens to that does end up affecting our British pound. And now people are already losing confidence in the US dollar as the world reserve currency, as there's nothing stopping the central banks just to keep printing. And the facts speak for themselves. The Federal Reserve have already printed trillions and trillions of dollars in response to this pandemic. Actually, more than 3 trillion US dollars have been created just in 2020 alone, which means that almost 20% of all existing US dollars have been created just this year. And the consequence of this? Well, the dollar has lost a colossal 95% of its value since 1940. So understandably, people are losing confidence in the US dollar as the world reserve currency, as the central banks are just printing so much money. So what's stopping them doing the exact same with a digital currency? I mean, it's still a fiat currency, as it's not backed by anything, and so there's nothing stopping the central banks just adding more and more digital currency into the system whenever they need more. Humans are greedy, and eventually greed will win. They could still print an unlimited supply, and all this will do is still cause the high levels of inflation and devalue the currency, and then people will lose confidence in the new digital currency and will be in the same boat that we're in today. And so this big problem of creating an infinite supply still exists with CBDC. Now some of you might say, well, why not use digital currency but then back it up with gold? Well, I say, what's stopping them messing this up? This is essentially the system we had back in the 1900s when the gold paper certificates came out, which were backed by gold. But over time, greed will still take over, and central banks will end up printing more digital currency than what they have in gold, and again will be in the same boat we are in today. And so it seems the only way to really get out of this mess is to use a currency with limited supply. Digital currency does still seem like a good idea as it's more efficient, but it needs to be limited. CBDC is not limited. Now the problem with gold is that it's not fractional, and so you have to carry physical gold, and it's not very efficient either. And you do have to think about the possibility of gold getting confiscated and becoming centralized. And this is perhaps why investors are now looking to Bitcoin. Some investors have already compared Bitcoin to digital gold. It is a digital currency that is also limited. There's only ever going to be 21 million Bitcoins, and it's decentralized, so everyone is equal. Now it does seem to tick all the boxes, but there are also issues with Bitcoin as well. The main one being that it currently is so volatile, as people are viewing it as a trading tool to get rich quick rather than having confidence in it as a currency. And we've already seen China and Russia ban Bitcoin. Can't use a currency if it's banned. Now we have made another video solely on Bitcoin, so I will be dropping a link to that below. But overall, as you can see, there are a lot of alternatives for this new digital currency. There is a big push, and it will be really interesting to see which one it is that comes out as the winner. So if you found value out of this video, which I really hope you did, then hit that thumbs up button. That way you get more of our videos recommended to you. And also hit that subscribe button so you don't miss out on our next financial education video. I'll see you on the next one. Take care.